Banks are now finished. That's what we are being told here in the US because of a recent turn of events. I want to break down what's happening at this time, but what you need to understand is if you are currently putting your money in a small or regional bank, well, you may need to get it out sooner rather than later. I'll explain why in just a moment, but first, all I ask is one thing. Takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now, let's begin. Banks here in the United States have been struggling for years. We've seen lending go from it was just booming, everybody was getting a loan for cars, homes, vacations, and everything in between, and now, not so much. Good news is that mortgage rates have actually been coming down each week for the past 6 weeks, but there could be some more worries on the horizon. Look at this, because this is where everything is stemming from. It says the Freedom Caucus member Anna Paulina Luna joins AOC to push 10% credit card interest rate cap. Now, that is huge. But you're probably thinking, well, that's great. I can't wait for that because that was something that President Trump, he said, yeah, let's cap credit card rates at just 10%. Well, now many people are like, okay, well, when are we going to do it? Well, according to reports, it could happen sooner rather than later for one reason. We are seeing so many people struggle to pay their bills. Interest rates are so high on credit cards, upwards of 22% on average. That's insane. But for all these people that are struggling to pay their bills using plastic, paying with a credit card to just keep the lights on, put food on the table, keep their car insured, well, guess what? Things could be easier for them as far as credit card interest. But you need to listen to this because this is what I'm telling you. Banks will be finished if this goes through. Listen to this. This person I've talked to before, okay? This person manages a bank, okay? Listen to this. With all the talks of capping credit card rates, I just want to warn you of what is likely to happen. First off, I manage a very small bank and capping rates would completely ruin our business. We aren't seeing a lot of new lending right now, so that won't bring in any new business. And credit card rates bring in a substantial amount of revenue for us. If there is a cap on rates, we would need to adjust other fees or our bank would close. Now, I want to touch on this for a second, but first, here's what is a big issue. We are seeing a push to cap credit card interest rates at 10%. It's from Anna Paulina Luna, from AOC, Bernie Sanders. Many lawmakers have been pretty much pushing this. They want to get something through because they believe it's going to help the American people. And it would. But it's only going to help the American people that have credit cards through a large lender like Chase. If you have a credit card through a very small local bank, a credit union, okay, you're not going to do very well because they are going to struggle. Listen to this. This person also said that banks are already planning to make changes. If credit card rates are capped at just 10%, then millions of accounts will be closed. You're probably thinking, well, why? Why would you go and cap credit card rates at 10% and then close all those accounts? Well, it's simple, because of risk. Right now, banks are concerned and they are trying to minimize risk at all costs. One of the ways they're doing that is by lowering your available credit. Then on top of lowering your available credit, once you get it down low enough and you are making payments, in some cases, they simply cancel your account. They shut it down. So then what happens is you're still making payments, monthly payments to that account, but you can't actually use it. You can't go and use your card to make any new purchases. So again, that's how they're limiting risk. But here's the other thing. If we cap credit cards at 10%, and many people are like, well, that's perfect, because I'm already spending too much money on interest. Okay, here's what bankers are now saying. Once credit card rates are capped at 10%, they say banking fees will have to go up on savings and checking accounts in order to compensate for the loss. So you go into, let's say, Chase Bank. Now, again, this is hypothetical as far as like numbers and things like that go. But this is what bankers are saying: is if we cap interest rates at 10%, then we are going to have to increase the cost for, let's say, a monthly membership or a monthly service fee, right? Maybe you have a free checking account right now. Yeah, free checking accounts go away. Free savings account goes away. Instead, you're going to pay $9.95 a month. Okay, $14.95, $19.99. You're going to pay that every single month as long as you have an account at that financial institution, simply because they have to make money somewhere or else they close. Listen to this. Okay, you don't want to pay 22% interest, that's fine. But we are actually going to increase the late payment fee. The late payment is now going to increase. Instead of $25 for every late payment, it's going to be $35, $45. Maybe it goes up from there, who knows? It's going to go up. Another banker said this, that the over limit transaction fees are going to increase, or they're just going to block all transactions that would put you up over that limit. Here's the other problem. Once you get hit with the 10% interest, that could put you over the limit as well, which means that over limit transaction fee would kick in and you would pay the additional fee. So instead of, let's say, a $25 fee, it's going to go even higher. We're now, okay, you went over the limit, we're adding on additional $35. So let's say you have an over limit fee and you forgot to make the payment, that could be $75, $70 right there that you're going to have to pay simply because your balance got too high and you forgot to make a payment. Listen to this one. Credit card, the annual fee for credit card usage is going to go up. They're saying, okay, if you don't want to make a payment of 22% or for 22% interest, fine. If lawmakers want to change that, fine. But what we're going to do is we are now going to put in a credit card, an annual rate for that credit card, just to use it. Maybe it's $99 a year. Maybe it's $400 a year. I don't know. But that's what bankers are now saying, is that what we are about to see, if President Trump actually pushes this through and lawmakers are behind him on this, what we are about to see is banks are going to change forever. The typical bank that you're used to, that you've been accustomed to for years and decades, is going to change. We are going to see banks go under. We're going to see lending drop. We're going to see the usage of banks go down as well. Because why would somebody put $50 in their account if they only have, or if they have a $9 per month service fee? Okay, that you have to pay $9 or $20 a month just to keep your money in a bank. In that case, certain people that have lower incomes and don't have a lot of disposable income that they can put into savings and keep in a checking account, they're just going to cash their check and keep the money on them, which means banks are not going to have, not going to be able to use those funds anymore. We're going to see a bank run, according to a few bankers. So we're going to see what happens moving forward. All I can tell you right now is that, yes, this idea that President Trump had of capping credit card interest rates at 10%, it seemed like a very good idea that could actually boost the economy. The problem is banks are now coming back and saying that, okay, you want to cap credit card interest rates? Go for it. But we are going to change all of our other fees. So in the end, it's actually going to balance out. So we'll see what happens moving forward, but that's what we know as of today. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.